Welcome to the Market Huddle Plus, episode 23. I'm Patrick Saruzna with our weekly 30-minute catch-up interviews with past guests. This week, we have Harris Kupperman here with Kuppy's Korner, a chat on the market. So let's get Kuppy on the call. Kuppy, first off, on behalf of Kevin and myself, I just wanted to thank you for being a great friend to the show and wanted to wish you a happy holidays.
Hey, happy holidays to you guys. You know you can always call me when a guest cancels at the last minute. I'm your man.
For sure, buddy. Listen, I had a great laugh with your tweet on the just egg meme, jokingly comparing most finance bros trying to explain their investment process versus you just simply buying cheap assets with tailwind. I just wanted you to elaborate on this because it was you gave me a good chuckle.
Yeah, I tweeted this morning, and in due respect, I stole that blatantly from Trader Ferg and his blog. So respect. I give him the credit for that. But it's a meme, and it shows. I don't know, it's not a meme; it's a picture, and it shows some synthetic egg thing made out of bean paste and water and like soybean oil, and it's like 200 ingredients of like fake eggs. And then it's just like an egg, and the only ingredient is egg. And I really do think that's how most finance guys think of the world. You talk to a guy for 20 minutes about what their process is, and it's this, but this, and then this, and this, and you kind of tell they're just kind of winging it, honestly. And my process is just super simple. Buy something really, really cheap with a tailwind. And strength of the tailwind usually is more important than just the absolute cheapness of it. And simple, easy. It works.
Now, for tailwind, to me, I have a technical process to identify tailwind. But how do you define tailwind? What is it that you want to see that defines that for you?
Oh, I just want to see the macro getting better, like dramatically better over the next month, quarter, year. I mean, I want to see revenue and earnings both going in the right direction, and preferably, I want the rate of change accelerating. I want that second derivative just ramping up to the sky. And, everything I own, it's just a second derivative. I want to see growth. Because that's what you get paid for. I mean, we're in the business of multiple expansion, valuation creation. I mean, the earnings grow, but it's kind of a lagging thing almost. Like, you're not going to get enough earnings growth to justify a multi-bagger upside. So it's got to be multiple expansion. And if you get it really cheap and you could sell it, at a good price, like you can recycle that money fast and make a lot of money.
So listen, let's keep talking about this investment process and the way you approach it. Now, one of the things you often reference is that you take concentrated positioning. And I'm curious, how do you manage the additional volatility associated with that? Is it you just hold through it, or do you do things around it to kind of help blunt the concentration volatility?
Sometimes we start drinking at breakfast time.
No, that's a smart strategy.
No, sometimes you come into the work and, oil's down $3 and it's 9 a.m. and you just pour one and you say, today's going to suck.
And play the long game, right?
Play the long game. Look, it's volatile. I'm in assets that are volatile, that have crushed people's hopes, dreams, and souls. And every time there's a downtick, everyone panics. It's amazing. If oil's down $3, so let's call it 5%. 4%, whatever it is. I mean, your average, large cap oil stock might be down twice as much, 7-8%. And then, your small cap stuff, your fringe stuff, your, services companies, they might drop 10-15%. And that's just the nature of looking for things that can 5 and 10x. If they're going to go up 5 or 10x over a couple of year holding period, potentially, then, they could drop 20% in a day. And that's just the nature of these things. And you get used to it. I used to have like stomach ulcers, and I was all, despondent and freaked out. And, what am I going to do? How am I going to tell clients? How am I going to get groceries? What do I have to get like a nighttime job at a bar? And now I just realize it's just part of the game. I think having been successful for over 20 years, you just don't have to worry as much. Maybe, if I was, 100% of my net worth in uranium, I'd be spooked every time it moved. I'd probably trade bad.
Yeah. So what criteria do you use when you choose to resize your trades or you take some off the table? Like, what is it that makes that decision for you? Is it just when the position gets too big? Like, what is your thought?
I cut some back when it gets really, really big. but mostly I just let it ride. I don't really, you know, if something changes and I want to sell 20% of my position, I just sell the whole damn thing. It's not one of those things where, you want to just take like a little bit off because you're a little bit less confident. That's not how it works. And, I tend to be the sort of guy that on a pullback, I'll usually add a bit more, so a big position gets even bigger. But, cheaper price means better bargain. But, I'm not really focused on stock charts and that sort of thing. I leave that to you. I'm just focused on the fundamentals of the business.
Well, I was using my crayons to take a look at that U308 contract, and boy, your uranium call was spot on. And so let's talk about that. I mean,
don't go
uranium. Yeah, but the uranium's up on the year like close to like 90%. Like it's been just.
You still got 2 weeks left.
Well, listen, but I'm just saying it's been a great call and it's been working really great. Why don't you? I mean, what do you? How do you think this continues to play out over the upcoming year?
Well, I mean, I think at some point, some of the nuclear power plant guys are going to have an oh shit moment, and they're going to have to go buy. We've had an amazing move higher, but this has mostly been traders blowing up and covering shorts. This has been miners that oversold and they couldn't hit their production targets, and they've been in the open market buying because they have purchase commitments. There's a lot of like hedgers and traders sort of movement in a thin market. I mean, there's huge deficits, right? But we really haven't seen utilities step up to the plate and start buying. I mean, bits and pieces. But these guys are literally just sitting out there with RFPs. There's something like a dozen RFPs out there right now. And the funny thing is that no one's responding to the RFPs. And so the utilities, they're kind of stuck in stasis because, if no one responds to the RFP, they're not going to go back, they're not going to go into the market and buy physical because they're going to run the price up. If you went and bought a few million pounds of physical, you'd run it to $200. And so, not 200, you'd run it from say 90 today to like 110 or something. And so they're not going to go into the market because they don't want to run it up and then get filled on their physical. But no one's responding, so they don't know what the hell to do. And they keep coming back into the market with a new RFP. But the issue is that there's really only 2 producers globally of any scale, and they're both sold out. And if these guys, had a first-year intern doing their research, they'd already know that. I mean, anyone in the uranium business already has this data. I mean, I could share my data with them if they want it. And as a result, they're going to eventually be forced into the market to buy pounds because the RFPs won't ever get filled. I mean, or if they do get filled, it's at some egregious price. And I think next year is the year they come into the market and start tripping and start buying. And they all have this weird gentleman's agreement where they sell a bit of physical from time to time to keep the price down. It's the nature of the uranium market where you have these offtake agreements where there's a floor and a ceiling. And so, you're incentivized to keep the spot price down so that, the reference price that your contract is priced at is lower. So everyone's kind of selling a bit in the spot market, and then they're buying in the term market with these reference prices. And I have this gentleman's agreement. They won't go into the spot market. And I think pretty soon they're going to be forced into the spot market. And once one kind of breaks ranks, they all do. And they're just going to start tripping over each other. It's why you're seeing uranium that used to move like up 50 cents was a big day and everyone got excited, and then up $1 was a big day. And now the bid-ask spread is $3 wide and it's moving $1 or $2 a day. I think we'll start seeing $5 sort of days as these guys start lifting offers and panicking. And no, I think this game stonks. I think it looks like game stonk, except for no one in their right mind ever needed to own GameStop. Like it was only it was like the kiddie guy who bought it, and like he probably still owns it. But like no actual adults ever wanted to own this thing, except for Melvin that was short that had to buy it. Here you have utilities that genuinely need uranium. I mean, it's almost 15% of U.S. Electricity. Like they need the thing, and so they're going to go out there and buy it, and they're price insensitive, really.
So, how do you think the geopolitics play into it? Obviously, governments are they're talking about banning Russian uranium, or at least there's talk of that. Like, how do you think this plays into it?
Well, I mean, it'll be very good if they do ban Russian uranium, because I mean that's a big percentage of the enriched uranium that's coming into the U.S. I assume that these utilities are lobbying like madmen to force that not to become law, because it would just make it even tighter in the market. There's a good chance that Russia just cuts off Western utilities, on their own, and we don't need any laws. No, I think you have a lot of moving pieces here. And if I was a utility and they were passing a law banning me from buying from my largest customer, I'd be in the market right now buying before the law became a law. Like, I think it's just going to panic people even more.
Right. Well, let's move on and talk some of these offshore. But before we do, let's talk crude. I mean, it's been a pretty ugly couple months as crude went from $95 back down to year lows to under 70 temporarily. What do you make of the oil price?
I got this one wrong. Thankfully, uranium saved my ass. No, look, there's a bunch of inventory. It's more than I expected. China's ramped up slower than I expected. A bunch of countries ramped up supply faster than I expected. We're still in deficits globally, but it's a smaller deficit than I expected. And, the biggest source of supply that no one expected was CTAs and speculators who have one of the largest short positions they've ever had. It's one of the most lopsided positions ever in the history of oil, outside of like Q1 of 2020. And I think these guys will eventually be forced to cover. And when they cover, the price will probably go back to an equilibrium, which is, higher than today. Today we're looking at WTI at 74. And I tend to think it's an 8 or maybe even a 9 on it. And, should be good for me.
Yeah. So let's talk these offshore drillers, because that's your thing. Obviously, we've talked on the show about Valaris numerous times, but they are far more resilient than a lot of the other energy plays, particularly like Tidewater's, just a stone throw away from its 52-week highs. What's the story now? Are you still bullish and strong?
Yeah, I use this pullback to buy quite a lot more. Look, Valaris, I think it's like 10-15% of net asset value, replacement cost, whatever. Tidewater is like 25%. And, they both are going to show huge earnings growth next year. And it's not, in the theoretical, like they have the contracts in hand, and the contracts, current contracts are going to roll over into higher priced contracts next year. And they're going to use that cash flow for buybacks. Tidewater yesterday announced they completed the first phase of their buyback program. Valaris has been out there, going to do over 200 million in buybacks this year. But buybacks, they help the share price. They sit below the bid, and they support it when everyone's selling. And, it creates a lot of value when you're buying something at a huge discount to fair value, where your cash flow is going to explode. And I think next year when cash flow explodes, it all goes into buybacks. And it looks a lot like AMR, which is a coal stock that's making a complete moonshot these days. And, I think it compares very differently to many other coal stocks that paid out dividends, because no one really wants those. I mean, they want the buyback. What it does, it tricks the ETFs and the index funds and everything else, where the free float keeps constricting, and the index products are slower to readjust, the weightings. And as a result, the float goes down, and the incremental buyback just launches the share price. And I think more companies that trade at 1, 2, and 3 times cash flow should be doing buybacks instead of dividends. And I applaud Valaris and Tidewater for doing the right thing. And for that matter, Seadrill's also had a pretty aggressive buyback program.
Right. Well, the last one I want to get an update from you on is Joe's. But listen, I wanted to touch on like what happened. Like July had its earnings. The thing gaps like 20% higher. And then the thing went through a clear multi-month distribution cycle. Like what played out there? I mean, obviously it's improving and it's getting back up toward the levels where it was trading earlier. But what happened there?
I don't know, bro. You're the crayon guy. I mean, was it an Elliott wave? Is it a Gann distribution? Is it? I don't know. You tell me. I just do the research.
Well, obviously there were more sellers than buyers, right? but ultimately, it's the same story for you.
Yeah, look, we haven't changed our position on this in a while. The numbers are great. We get a couple times a month we do grab samples out of the county clerk's website, where they put all the property transactions. We have pretty good data. I mean, Q3 was really strong. Q4 is really, really strong. I mean, Florida hasn't really skipped a beat, even when mortgages went into the 8s, and now mortgages are back in the 7s, and these guys are just killing it. They're absolutely killing it. And I have no idea why this is $58 right now as we're chatting. I mean, look, I think the net asset value is between 200 and 300. You'd expect this to trade between 200 and 300. And I tend to think it ought to trade at a premium to net asset value because the net asset value is growing so rapidly. It remains the most mispriced thing on my screen. And, it's my second largest position after uranium.
All right. Well, listen, thanks for joining us for this. Listen, where can people follow you?
Oh, go to @Kuppy on Twitter and prepare to be offended. I'm smashing it with the memes now. What's it? The Twitter blue check mark? Elon charged me $100-something for that, and
so now you're taking advantage.
Oh no, I need to make it all back, but I'm making like $30 a month, so it's pretty good. I feel like it's like $1.50 per Yellen meme.
So where are you at now? You out in PR?
Yeah, I'm out in PR. But I do want to say that I'm actually profitable on Twitter this year. For the life of me, I don't understand Elon's business model because he could have charged me, what is it, $100 a year? He could have charged me that and not had to pay me anything back. And I don't really know. I couldn't care less. Instead, I'm super excited when I get my monthly paycheck of like $29 or something. It makes me actually feel good, like I've contributed to society with my memes.
That's awesome.
But I think I'm up almost $100 this year.
There you go. So listen, you know what's going on today? Today is the much anticipated Market Huddle dinner where Kevin is taking out 3 of the unlucky Huddle listeners for dinner for losing that bet to me. So I'm actually back in Toronto for the holidays, and I have every intention to crash the dinner unannounced. So
that sounds like fun.
I'm going to make sure I send all your regards to them.
Yeah, please do. Please do. Why don't you put a round of drinks on my account?
But yeah, on the $29 you just got from Elon.
I got to start doing some more memes then.
All right, buddy. Well, listen, happy holidays. Thanks for coming on the show.
Hey, absolutely. Got to get you down here sometime in Q1. Come to Puerto Rico.
Absolutely. Looking forward to it, bud.
Awesome, man.
Cheers. Thank you for tuning into the Market Huddle Plus. We'll be back next week with a holiday special episode. Cheers, everyone.